Manager and host of Kev on the Radio. I'm here with the queen of K4CO Radio, Vice President Sarah Duke. How are you today, Sarah?
Thank you, Kev. Wow, that's a lot to live up to. I've never been the queen.
Sure you haven't.
But cool. Yeah, thank you. Thank you for listening to K4CO Radio. It's always nice to be here after hours. And I haven't done my afternoon show in a while.
Yeah,
I miss my afternooners with Sarah.
I think everybody misses that.
Yeah.
We do. I do.
We can go down a rabbit hole with
You have
that.
a great show. You're going to have to take an afternoon off and
I agree.
get back in the seat.
I agree.
All right. Well, here's what we're here to do. We have a special guest. We're going to be talking reverse mortgages this afternoon with Tim Oddo. Welcome, Tim. Welcome back, I should say, right?
Yeah. Yes. Yeah. Thank you, Kevin.
Excellent.
Thanks,
and
sir.
I was just mentioning off the air that I'm going to get a full education here this afternoon because I really don't know anything about reverse mortgages. So, Abby, where do we dive in?
I know. Well, from the beginning. Well, first, before we launch, I always want to tell people thank you for tuning in either on the app and listening. Please send in your questions, and there's lots of ways to do that. You can do it on the app, or you can go to Facebook, which is live if you want to see our beautiful faces. We are there in full Technicolor on Facebook, Instagram, YouTube, and LinkedIn. And of course, you can put your questions in the comments, and we will get to those because there's a lot of information that's going to be coming at you. So if you wanted to follow along also on his website, this is Tim Oddo. He's a part of the Oddo Group. He's a reverse mortgage specialist with Luminate Bank. And his website is nomonthlymortgage.com. And you're going to see that actually on the banner if you're watching on Facebook. And you can email him at tim.oddo, which is ODDO, at goluminate.com. So I wanted to make sure we got that going. And yeah, there's so much to talk about with reverse mortgages. I was in the business, as we talked about before,
Yes.
back in 2008, which was a very tumultuous time to be in that.
Absolutely.
But I thought we would start, with how long you've been doing this, because it's been a few decades, and
Yes.
give us kind of an overview of what an actual reverse mortgage is.
Sure. I started doing reverse mortgages back in the I started doing mortgages back in the mid-90s, and did all different, sorts of mortgages and that kind of thing, and enjoyed doing the business and enjoyed helping people, and did the traditional kind of conventional loans, right, that most people are familiar with. I was introduced to reverse mortgages a couple times in the early 2000s, where I was able to help a couple of clients who were in dire straits and who couldn't afford to stay there and couldn't afford to make their monthly mortgage payments. So the reverse mortgage was able to help save a couple of my clients, and it kind of stuck in my brain. Then the '08 time frame, I kind of lost my way, and I started doing recruiting, and I was doing managing. And when I was looking for a way back into doing mortgages again, I was kind of looking to be in a niche where I could just be involved and really dig deep. And so I decided to jump into reverse mortgages because I had done a couple, didn't quite totally understand what I was getting myself into. So that's been a decade now. So in 2015, I decided to focus on reverses solely, but totally underestimated the apprehension and the stigma and the misunderstanding and misconceptions around a reverse. A reverse truly is a awesome financial planning tool. It's a way to let the borrower stay in the home longer, live there, age in place, have a safe, comfortable spot to be. Most people would rather stay in their home if they have the choice, right? But the issue is that reverse mortgages are mostly misunderstood. Everybody, truthfully, there's a huge stigma around reverse mortgages. There just is, and people think you're gonna, own mom's home when she passes. When she exits the world, you own the home. The bank owns the home, and you're gonna use up all the kids' equity, and people think that they're a bad thing, and in reality, when you fully understand them and you really wrap your arms around them, it's the best kept secret in the mortgage world. Right. And if more people understood it, millions more would be taking advantage of this loan.
Right. Give us kind of the high level. So people are probably more used to, I don't want to put words into incorrect, your typical mortgage where you're paying every month and you have a 30-year to pay it off. That's kind of your quote unquote very high level typical mortgage.
Right.
If you're 15 years, 30 years, sometimes you have an ARM. Your interest rate sometimes can fluctuate, but hopefully you can get it nailed down.
Right.
So how does the reverse mortgage differ from something like that?
Yeah, I mean, first and foremost, a reverse mortgage is still just a loan secured to the home. So just like a conventional loan, you still own the property, still remains in your name, is still a loan secured to the home. The big difference is with a reverse, when you use a reverse mortgage and you borrow money against the equity in your home, it doesn't require a monthly mortgage payment. So it acts just like a conventional loan, a regular loan, except for it doesn't require you make a monthly mortgage payment. Now, you still have to pay the loan back, you still have to pay the interest back, but you don't have to pay the interest or make a payment until you exit the property. So that's the big distinction, is that it's a flexible payment loan, right? It doesn't require a monthly mortgage payment.
Okay.
So, and you must be 62 or older, typically.
Okay.
So you're talking about seniors, right? So again, it's a protected class of people, right? So you got to overeducate them and their kids on how it works. But it's great to be able to keep somebody on a fixed income in their home and give them the flexibility of not having to make a monthly mortgage payment.
Okay. So walk us through, let's say a senior comes to you and he or she is 65 years old and does a reverse mortgage with you and lives to be another 10 years. So 75 and passes away. What happens then with that? There's been no payment that's being made and you have that extra to pay back. Does that get lumped in if they sell it? Is it a kind of a balloon payment fashion? How does that work?
Yeah, great question. So if you do a loan for a 65-year-old, and let's say she has a $500,000 home and she owes $100,000 when you do the reverse. So we do the reverse mortgage. Her initial loan balance is approximately $100,000, right? But in exchange for not making a payment every month, then an interest-only payment accrues, gets added to her balance every month. So her balance is going up in small increments monthly. Okay. So she lives there for 10 years until she's 75. Now, those 10 years, the interest can vary, but it accrues. So let's say in 10 years when she passes away, she owes $200,000 on the mortgage. So she owes $100,000 more than she started with, but she hasn't made a payment for 10 years, right? It allowed her to live on her Social Security. She didn't have to have that extra job or full-time job anymore. And so when she passes away, the home still goes to her estate. So it goes to her son, and her son gets the home because he's the rightful heir, and he sells it for $600,000, right? It's gone up, hopefully, should be. Sells it for $600,000. He pays off the $200,000 reverse mortgage that mom owed, and he walks with approximately $400,000 in net equity to him or to the estate at that time. Also, if she can't live in the home anymore, she has to go to assisted living. She sells it for $600,000, pays off the $200,000, whatever she owes on the reverse, and then she takes that $400,000 to go to her next living situation.
I'm sure there are a lot of factors that go into this. I know you personally, I know you and your beautiful wife, Michelle, and you educate people and you strive on relationships, which I really admire. And I'm sure there are a lot of factors that go into the conversation of, if it's not the right fit, I'm sure that's a conversation as well to say, you know what, this probably doesn't make sense for your situation.
Yeah, for sure. There's definitely factors you want to consider when doing this. And reverse mortgage, more so than a normal loan, it usually takes a village, right? So you bring it in, if Kevin came to me with his mom, I'd be like, I want Kevin to be there. I want Kevin's sister to be there. I want, his mom's sister to be there or something like that. Because we want everybody involved in the family to understand it. Because it does impact what Kevin's going to inherit when his mom passes away, with the reverse mortgage. Now, he's still going to walk with probably a nice chunk of equity, typically, but it's important to involve everybody. It is a relationship. We're tied. I always feel like I'm tied to that customer. I expect them to call me after the fact because there's going to be questions, or I want Kevin to feel free to go, hey, I got to call Tim because my mom's worried about XYZ, or she got this in the mail and she doesn't understand what it is. Right. So it's more of a high touch loan than your traditional, 30-year fix. See you later. Have a nice life. Don't call me. Right.
Yep.
It's a different dynamic.
Yeah, I've learned a lot from you and Michelle, truly, about being what high touch really means. And it's to really engage the person or the couple or the family all the time, very frequently, to say, just to check in and see how it's going. Because it's a lot of times I feel sometimes it's you buy a house, you get the loan, and then it's a done deal.
Right.
But you guys don't do that. You have a lot of touch points along the way to make sure you guys are settled in. How is the loan working for you? Is there anything we can do? So I admire that process, that it's not just we're washing our hands of it.
Yeah. I mean, we try to do that. I mean, no one is perfect, but we do want to be, I want all my clients to feel like they can call me anytime to tell me about something. One of my past clients that I've done a couple of reverses for, she called me 3 weeks ago because she was going in for surgery, back surgery, and I'm Italian and she's Italian, so we kind of have this Italian connection. And her name is Louise, and she calls me and she's really nervous about the surgery. And she's like, "You make sure if something happens to me, that this is, that you take care and make sure that John knows what to do."
Yeah.
It's awesome.
But it's like I have that, but I'm glad she did, right? She made it through flying colors. I followed up. So we're good.
Good.
But right, I mean, but people get nervous about that. They want to make sure that they're gonna, everything's gonna be okay, right? In
Of
those
course.
situations.
So speaking of that, is there anything that can make it fall apart? Like after you've gotten your reverse mortgage, you said you don't have to worry about a monthly payment or anything until the end. I mean, is there anything post-reverse mortgage that can
Mess it
work
up.
against you?
Yeah. With a reverse mortgage, it's a very flexible loan, Kevin. So once you have a reverse mortgage, you don't have to make a monthly mortgage payment at all, right? It feels like you paid your house off, right? Essentially, because I have no monthly payment. However, you still have to pay your property taxes and your homeowner's insurance.
Sure.
So that's probably and you have to and what HUD calls maintain the home, right? Just keep. Now they don't do any inspections after the appraisal. They're not coming around and looking at your house every year. But the big thing I would say is you've got to pay your property taxes, right? And there was some confusion years ago with reverse mortgages. And there's reasons why this has gotten kind of a black eye. One of the things is everybody thought, I don't have to make a payment ever on anything. It's like, well, even if I pay my house off, I have to pay my property taxes. Because if I don't do that, they'll take my home, right?
Right.
So the same is true with the reverse. You still have to pay, maintain. But if you pay your property taxes, basically, your mom could live there for the rest of her life, literally. There's no term on a reverse mortgage, technically.
Okay.
Reverse, the loan becomes due and payable, believe it or not, on the borrower's 150th birthday.
Wow.
I'm not kidding you. So essentially, the HUD's saying there's no term. You can live here the rest of your life.
Okay.
Yeah.
I wanted to go back to 2008 because
Yes.
that was because it's changed a lot, thank goodness, in roughly 20 years. In 2008, we had a bit of a melt and crash in the
Yes.
housing world. But now because we're going to get into some of the myths, because I'm sure you've heard everything out there. And there are different parameters now. And what has changed since 2008 when a lot of the pitfalls came? And I know it was really loose and there were no really guidelines from what I remember being in that world. It's like, you can have stated income, you make $1 million per month, and you don't have a job, but that's great. We're going to write this loan for you. And it was very loose like that. So how has that changed?
Well, a lot. A mirror, you essentially could get a reverse mortgage if you had enough equity, right? So if you're old enough and you were alive and you had enough equity in your home, done. Here you go, and you didn't have to verify much. Some of the changes they've made in the last 10 years. Number one, they do have income and credit qualifications now, so we have to prove that you have the wherewithal to make your monthly payments, meaning your credit cards, car payment, and your taxes and insurance, essentially. Okay. Now, it's much easier for me to qualify somebody in the reverse world because I'm not counting a monthly mortgage payment against them. So it's still going to be easier for me to qualify somebody than it on a fixed income than it is somebody like Michelle who has to count all the payments against them, right?
Right.
But we do have there. So there is some. So there are income and credit qualifications, although it's a little easier. It's a little. It's not quite as stringent. Another thing they made. This sounds silly, but prior to 2013, the minimum age to be in this loan is 62. So if I was 62 and my wife was 52, technically she can't be on the loan. So I would do the loan in my name, and then we live there 10 years, and I pass away suddenly. My wife was never on the loan. So in that case, in the old days, they'd come to Michelle and they'd go, "Hey, you
don't qualify.
You don't qualify. You're not on the loan. You have to refinance it or pay us off." So I got a reverse mortgage, and I'm getting kicked out of my home now,
Right.
which didn't look good, right? That didn't bode well for HUD. So there was some components there where they are protecting what we call an eligible non-borrowing spouse is the technical term. So
Okay.
it protects somebody who's not old enough.
Okay.
But at least one of you has to be 62 or older.
That's a good question, actually. It made me think of something else. So if, let's say you're not married and you have a child, can you put a kiddo on there, or is this really for a spouse only?
Great question. Technically, you can. So I've done a reverse mortgage just down the road from here for a woman who was 92. We waited a year till her daughter turned 62. Now her daughter lived with her. We waited a year till she turned 62, and we did the loan on both of their names.
Okay.
Because once you're 62 and older, you can be on the loan to get as co-borrowers, right?
Okay. So the kiddo still has to be at least 62.
In order to be on the loan, yes.
So my kid has a hot minute. He's 6.
Yeah.
It's got a ways.
So it's a hard pass on me.
He's got a way. Right?
Okay.
I always joke, it's like, right, like you know, if me and my brother were both over 62, I mean, you could do, right? You could do a reverse mortgage with anyone as long as you're both 62 or old. However, if you're married, then there is cutouts to protect the non-borrowing spouse then, yes.
Okay. I had one other question. Kevin, please jump in. I love
Go
this
ahead.
world. I lived in it, and I find it fascinating. People didn't listen to me when I told them what to do with their money, hence 2008 happened. They were like, yay, free money. We're going to spend everything, and then the world crashed.
Yeah.
So when people ask, yay, I don't have a monthly mortgage, my conversations usually were, how can you improve the house? Do you go into those conversations at all, like now that you're saving $2,000 a month? Now you can do some home improvements, you can do the renovation on your kitchen, whatever you need to do. I mean, do those conversations come up with how to improve their situation even more?
Yeah, absolutely. You know, now every situation's different, right? I mean, you're going to have cases where they are paying $1,000 a month and mortgage payment, and they're only making $1,600 a month in Social Security. So just by eliminating their monthly mortgage payment, you're really saving them, right? You're really helping protect them and giving them longevity to live in that home longer. But then there's plenty of people, I would say in the last 5 years, Sarah, we're doing more and more reverse mortgages for home improvements because I'm 70 and I have a bunch of equity and I'm not ready to move. But I want to make it more accessible. I'm tired of my kitchen, and it just needs a facelift. Do a reverse mortgage, pull $100,000 out, do all the stuff you want to do so you can live there for 10 more years and enjoy it. You don't have to make a monthly payment on it. Just have to pay it back when you exit. So I would say more and more we're seeing home improvements done on it. But it's a little bit of everything.
Nice. For those of you just joining in, we have Tim Oddo with the Oddo Group. He is a reverse mortgage specialist with Luminate Bank. And if you go to nomonthly.mortgage.com, you can find out more about Tim and all about the reverse mortgages that he can help you with. You can also email him at tim.oddo, which is ODDO, at goluminate.com, or call him at 303-233-4500. I love that phone number.
It's a good number, isn't it, Sarah?
It is a great number. Man, you snuck that one in. To get 4,500 is pretty killer. Kev, is there anything else before we dive into the myth portion of it?
Well, that's what I was going to dive into. I mean, as far as what is the most misunderstood aspect of a reverse mortgage.
Yeah.
Does it scare people?
It scares them big time.
Yeah.
I mean, Kevin, this is like if people really understood, I'd be the busiest mortgage guy in town. I mean, literally, not everybody needs a reverse. However, there is millions and millions of people in America that would benefit from a reverse tomorrow. But there's so much. This loan just requires 3 times the amount of education, right? So there's a number of myths. We're going to kind of delve into those a little bit more tonight. But the biggest myth, number one, and I hear it every week, is they say if you do a reverse mortgage from my mom, when she dies, if she passes away in the home, the bank gets the home. And it's like, no, that's not true. It's just a loan secured to the home. It's an FHA. It's a government insured loan. It's an FHA loan. Mom still is on title. She still owns the property. It still comes. My mom, who lives 10 minutes from here down by Park Meadows, has a reverse mortgage that I did for back in October of 2019, so 6 years ago. And it's worked great for her. It's allowed her to stop working, and she quit work during COVID when she was really nervous. And she still has approximately the same amount of equity she did when we did the loan, Kevin, because the house is appreciated, right? Everybody forgets about that. Yes, your balance is going up, but the appreciation of the home's going up as well. And but if she passed away tomorrow, God forbid, the home comes to me. I sell the home. I
pay off the loan.
Pay off the loan just like you would a normal loan, and I take whatever remaining equity, whatever the net proceeds are.
Where do you think that myth kind of originated from? You can blame me. It's fine.
Well, okay. All right. We'll do a quick rewind. So the very first reverse mortgage that was ever done in the country was in the early '60s, 1961, and it was done by a financial planner in Portland, Maine. Okay, so the initial days of the reverse mortgage in the early '60s, '70s, and '80s. They were all done by private institutions, private banks, that kind of thing. So the truth is that most of those guys did a reverse mortgage for mom because she was the widow and she was living, and they were doing them on free and clear homes. And they said, hey, mom, you can live here rent free, pull some money out, but when you pass away, we get the home, right? We own it. And so I think that nasty myth persists as then fast forward. So you have 61 was the first one. Fast forward to 1988. In 1988, President Reagan, way back then, President Reagan signed into law essentially the bill that the HECM bill. It's HECM. HECM is an acronym for Home Equity Conversion Mortgage. The HECM bill was signed by President Reagan. That kind of ushered in today's reverse mortgage. Now, there's been a bunch of, numerous changes over the year, the last almost 40 years. But essentially, since 1988, it's been an FHA or government-insured loan. The bank didn't get the home unless mom and dad borrowed too much money, lived there for 40 years. The value of the home went down, and
that's when it goes to the bank. If it doesn't get that, if you can't cover the loan after it sells?
Yeah. So one of the other things they instituted, Kevin, is years ago, they used to lend to a much higher loan to value, right? So you did this loan and they were getting, 60, 70% or more loan to value. Now, if you're young and then, you live there for 30 years, when you outlive your life expectancy, and then the values don't go up, or you get in the '08 situation where you have a 20% correction in the market, you might find yourself upside down. Today, they lend at a lower loan to value. However, the FHA insurance, the federal insurance, is in place to protect you, and it's what we call a non-recourse loan. A HECM reverse mortgage, today's reverse mortgage, is a non-recourse loan, which means you can never owe more than the value of the home.
Okay.
So technically, though, now my mom still has plenty of equity in her home, but let's say the values of these homes in the next 2 years drop by 50%. Now all of a sudden she's teetering at almost being upside down, right? Because we had a huge correction in the market, which would be terrible. But right, so if that happened and she passed away suddenly, and now she's upside down, then I still get the home technically, because I'm her heir and I'm the rightful owner of that home. Now, if she's upside down by 20 grand, I have the ability to basically go to the lender and say, you can have mom's home. I'm not, and they can't come after me for one nickel of that deficiency.
Okay.
Because of the FHA insurance.
How often would you say that happens?
Well, I think in today's reverse mortgage, scenario. I don't think it happens very often in the last 5 years or so. But it has happened, and especially on stuff that was done probably 10 years ago or longer, where we lent to a higher loan to value. And if you're in Denver, not as bad, Kevin, because you have a highly appreciating market. But if you go to a Midwest, somewhere in Minnesota or Ohio, and the homes just don't appreciate at the clip that they do here in Metro Denver, and you've had it for 25 years, right, there is a likelihood that you could be upside down. But again, mom keeps living there. Even if she's upside down, they can't make a payment. At that point, I'd be like, Mom, you're not moving. I mean, as long as she's good, right?
Yeah.
Keep paying the taxes.
Right.
Stay there, enjoy it, go out on your terms, right?
Nice. Thank you for. I actually never knew that. I mean, everyone that's here currently was alive in 1988, and I had no idea that was a Reagan passed law.
Yeah.
I mean, man.
Yeah.
See, I missed you when I was in this world. They just threw me in and
You need
said,
to
"Go,
know him in 08."
go sell some stuff, and you'll be great." I'm like, "Cool. How do I do this?" You hit on the HECM reverse loan and the HECM to HECM refinance, but you have the proprietary jumbo reverse and then the purchase reverse. Are those all very similar? Are there?
Yes and no.
Okay.
Yes and no.
I could tell by your face.
Well, so the HECM, the FHA reverse mortgage, that's kind of the standard bearer. That's probably done, for the most part, 95% roughly of reverse mortgages done are the HECM, just the traditional FHA reverse mortgage, which is what we've been primarily talking about tonight.
Right.
And within that sphere, you have just the regular loan, where you're just trying to pay off the loan and eliminate the monthly mortgage payment. There's a purchase way, so you can use a HECM reverse mortgage to purchase a home.
Okay.
And which is really cool too, which we can get into later if you want. And then outside of that, you have the proprietary, or sometimes I call it the jumbo, or private reverse mortgage. So it doesn't carry with it the FHA insurance, and it's really aimed at people probably in home values north of $1 million typically.
Okay.
I'm making some generalizations here, but it's really that's why I kind of call it a jumbo reverse mortgage option, because you don't have the backing of the government. You don't have quite as good of a rates. But if you had a $2 or $3 million home and you own it free and clear and you want some cash, it's a good way to pull equity out of there and not have to make a payment, but it comes at a higher rate, and you don't have the flexibility as far as being able to how you draw the money out.
Why would you ever do that, even if you're in a $3 million home? Why wouldn't you just still do the HECM if you're still doing the home improvements?
I mean, Sarah, if I lived in $1.5 million home or less, I would typically say 99% of the time I'd do the HECM, because it's just more flexible, and I think it's a better overall
Right.
platform. If I lived in a $3 million home and I really needed to pull $1 million out, I couldn't pull $1 million out of a HECM loan no matter
Okay.
what.
Okay.
It's just, it goes above. That's almost that takes you almost to the lending limit today.
Okay.
So if I needed $1 million and I had a $3 million home, I might opt for that, right? But for the most part, I like the HECM unless you're dealing with big numbers and people have to get
I gotcha.
a lot of their equity out for one reason or another.
Perfect. No, thank you. I didn't realize there was a ceiling on it. Okay, that makes more sense to me.
In the HECM world, the FHA reverse mortgage, the max lending limit is $1.2 million. It's $1,210,000 approximately today.
Okay.
So that means that we'll lend you a percentage of up to $1.2 million essentially.
Okay. Very cool.
Which is still really good. I mean, $1.2 million's pretty strong. I mean, that helps in a market like Denver where you have nice homes, right?
Oh, for sure. Yeah. I mean, we're getting more expensive by the day. I
We
mean,
are.
I mean, people they're coming here in droves.
Yeah, we are.
Which is, good, bad, and everything in between. You have a bunch of natives that are sitting in here. So, we love it. And a native, for all those that are listening, means you were born physically in Colorado.
I think we had Kevin. Is Kevin a native?
Yes.
Can we? Oh man, I think we had that conversation last time, Kevin, and I said I've been here for 30
Oh, and
4
she shut you
years,
down?
and she totally kiboshed that thing. She was not.
I'm not too bad, but I no.
No,
Very protective.
I got no grace on that at all. So I just let it go.
Even with people that are like, "Hey, I was a week old and I moved here," I'm like, "Nope, sorry, you're really, really close though." So, but no, we'll take the added people. And so, well, you talked about the equity, and so how actually is the equity affected when you're doing a reverse mortgage?
Yeah, I mean that's probably the second biggest myth. Okay, so the first is you don't own your home, which is not true. You own the home always. Second biggest myth you'll hear is people go, if Kevin's mom does this, she'll have no equity when Kevin will have no equity when mom's passed away 15 years from now. And the truth is that in today's reverse mortgage and with today's rates, what you can qualify for as far as the loan amount you qualify for is based on the value of the home, the age of the borrower, and the current rates. Okay, those essentially, there's a formula that HUD uses. We plug it all in, and it says this is how much you can lend them. Right now, you're going to realistically, approximately, I hate saying this because everybody's situation is different, but for an average age borrower, you're going to be able to qualify for about 40 to 50% of the value of the home. Only 40 to 50. So if I'm in my 60s or 70s, if I'm 70, I'm only going to qualify for about a 40% loan to value loan today. That's it. So that means I've got 60% equity left over. So realistically, even if I borrow all the money that I can get, all 40% of the value of my home, just with normal appreciation, yes, your balance is growing, but hopefully your home is going up on average, say 4% a year annually, historically, on average. I think that you'll still walk with a pretty good equity buffer, even if mom lived in that home for 15 years. You start at 40% loan to value, you might still have roughly 50% equity in the home, maybe, right?
Right.
Again, I want to say that because people that did their loan 15 and 20 years ago, that's not true, right? They were able to borrow more money, and they're not going to walk with as much equity, the kids. But today's reverse mortgage, my mom started with about a 50% loan to value 6 years ago, and she's got about 50% equity buffer in there today.
So you said 15 to 20 years ago, it was different. Were there new parameters that were put in the last decade?
Well, they've lowered the lending limits a couple times over the past 15 years.
Okay.
Most recently, it was in 2017. They lowered the lending limits, meaning they just kind of, compressed everything, meaning you had to have more equity in the home, more skin in the game, if you will.
For sure.
Additionally, so they did that. Additionally, the higher rates environment that we've been in the last 3 years,
Right.
In my world, in the reverse world, the higher the rates go, it compresses the loan to value. So as the rates go up, it lowers what we can lend you.
Sure.
So, which kind of stinks. So 3 years ago, I was lending at a much higher loan to value across the board on the borrowers than I am today.
Today.
Yeah.
I'm kind of half relieved. I know it puts people in a bit of a pinch, and I understand that. I love that you talk about pros and cons on your website. I'm glad we're moving in a more conservative world when it comes to lending, because if you give people an extra, $1 million, they're going to go out and spend it and have a good time. It's what I would do. I'm not going to be like, oh, I'm going to save it for a rainy day. No, I'm going to go travel the world. So I think as long as you do have your most valuable asset intact, then you won't be as likely to get yourself into trouble.
Yeah, yeah, you're right.
I think that's the goal.
Yeah, there's obviously times when you're so close to being able to make something work, and there's just not quite enough loan to value there to help somebody get over the hump, if you will, because they just don't have quite enough equity in there to do it. Mm-hmm. But you're right. Today's reverse mortgage is different. It's better, and it's improved over something 5 or 10 years ago, even.
Right.
Really. So. Yeah, ultimately, that's probably good. Hopefully, it'd be good for the reputation of this. Mm-hmm. I think someday it's going to be the mindset will change. I was at a group today, a senior coalition group, and there was a agent, a real estate agent there, and he found out what I did. He's like, yeah, he goes, your business is tough, but he goes, in 15 years, you're going to be crushing it. He goes, in 15 years, you're going to be so busy. Everybody's going to be doing this. And I thought it was kind of an interest, like just off the top of his head, because he goes, you have that generation that's worked so hard to pay their house down, and they just think, and now as these boomers and right Gen X kind of age up, they have more of an open mind to going, wait a second, this is just an asset. I can leverage this asset and use this in a meaningful way. And I think there's probably some truth to that, actually.
Yeah, absolutely. Well, let's continue with the myths, because I find this pretty fascinating. Because we've talked about people that would inherit it, your heirs that are left behind, that are now responsible for paying the loan. And a myth is that the kiddos or whoever gets the house are going to lose their inheritance. Is there any truth to that whatsoever?
Well, again, a reverse mortgage can definitely squeeze some of the equity that you're going to get out of the house, right? Because if Kevin's mom, we're picking on Kevin's mom tonight.
I know. You can pick on my mom.
Okay. All right. Let's pick on Sarah's mom. I'm sure they're both sweet ladies. But I mean, Sarah, if your mom owns her home free and clear and it's worth $600,000, if she passes away, you're going to inherit roughly that much money. If we do a reverse mortgage for her now, it might extend her life. It might give her added enjoyment in other ways. But maybe, when it's all said and done, she uses a couple $100,000 from a reverse. Now you're getting $400,000 instead of $600,000. Now most people would say, "Hey, look, I don't want the money. It's my mom's money. It's her equity in it," and that is the truth. But today's reverse, I would say, for the most part, ones that have done, more recently, the heirs, the kids are still going to walk with a good chunk of equity. But it's going to allow mom to age in place and stay there. And frankly, a reverse mortgage is underestimated, because if you go to these assisted living places, they're $6,000 to $8,000 a month. I mean, it's
very expensive.
It's
insane.
Crazy. It's insane. So, like, a reverse mortgage is a bargain, really, compared to that, right?
Completely. That's a really good point. I know.
You can burn through $500,000. I've had people go, "Well, I'll just sell my house and rent." I'm like, have you looked at rents? I mean, you can't, right? You're going to be paying $2,500 or $3,000 a month. You're going to burn through your money a lot quicker than just staying here and using the reverse mortgage
with no equity.
With no equity, nothing to show for it. A reverse, you're actually, if done right and you understand it, you should come out of there in better position than doing something like that, renting.
Right. Sorry.
And maintenance would be in the owner's best interest too, as far as resale and equity. Does that go a long way?
Absolutely, right? And hopefully a reverse mortgage allows them to do, to Sarah's point earlier, hopefully that allows them to do more maintenance, to do some fixes around the house. It doesn't have to be crazy, but update the kitchen, update the bathroom, make it wheelchair accessible if dad has a stroke. And, it's still cheaper to leave dad in the home, use a reverse mortgage to optimize the home, right? To maybe bring in some home health care a few days a week.
Which can also help cover caretakers and whatnot.
All of that.
Yeah.
All of that. It's huge. It's huge. Speaking of that, let me just touch on this real quick.
Sure.
Another thing that people don't realize is that, reverse mortgage, you can take, you have this money, you own the home free and clear, and you qualify for a $300,000 reverse mortgage. You don't have to pull all that money out. We're not going to give you all that money on day one anyway, actually. So you put that money in the reverse mortgage line of credit. That line of credit then becomes a pot of money you can draw from as needed.
Against.
You can borrow against. You don't have to borrow it all.
Right.
You only have to pay back what you've borrowed. But now all of a sudden, this reverse mortgage line of credit allows you to pay for long-term care, expenses and stuff. Not everybody has long-term care. I just recently did a reverse for a lady in Littleton who, her and her husband faithfully paid for 20 years on their long-term care plan. He gets early onset Alzheimer's or dementia. They jumped through all the hoops. They paid out zero, no money on that long-term care plan. He ended up dying with Alzheimer's. And we did, it's like they would have been way better off just having the reverse mortgage line of credit and being able to pull money out of there. You don't have to justify anything. It's your equity, right? It's your money.
Right.
And they wouldn't have to pay. They wouldn't have to make a monthly payment either on it. So.
Yeah.
And living in place is hugely important to the elderly. I lost both my parents, and that was number one on their list. Was I wanted die here, not in
Yeah.
the hospital, not in a home,
Yeah.
not around strangers,
Yes.
that kind of thing. I didn't get into a reverse mortgage or anything like that with them. They were kind of covered in that area, but just facing that, the end of your life, you
it's-
want to be
It's a big deal.
in your own home, comfortable.
Yeah. I would say 75% of people would rather be in their own home and age in place, right?
Yeah.
You live better, you're happier, and this allows you to do that, right? Age in place properly.
Yeah, less stressful.
Less stressful, and probably, net walk with some more money than if you have to go
Yeah.
into a senior assisted living place, frankly.
Yeah.
Completely. Yeah, both of my, on the grandparents' side, both wanted to stay. And man, my grandmother on my mom's side lived to be 102. And
Yikes.
she made it,
Wow.
I know, stubborn. Whew,
I love
through
that.
and through. That's why she lived that long.
I love that.
I think she lived in her home truly till maybe 98, 99.
Yeah.
And it took a crowbar to get her out because people in senior living were old. And it was so funny to hear like a 98-year-old say,
Tell
I don't
my
want to
mom.
be with
Yeah.
I
those
don't wanna
old
be with those
people.
old
I'm
people.
like, you are one of those old people. But yeah.
I don't think she was, not 98.
Oh, she
still,
was.
not her
still
Oh
at her
yeah,
house.
her mom actually lived to be about 101 too. So
Yeah.
I know.
I had
That's crazy.
I had a sweet lady who was 94. She was a single lady. She owned her home free and clear. She had done it all on her own. I mean, this lady was a self-made. She was awesome. She was a dynamo. She was 94, and she was bound and determined. She did not want to exit the property. She's like, if you put me in one of these places, I'm gonna, that's it. I'm gone. And I would go visit her. Now she was in pretty bad health, and she had like a hospital bed set up in her dining room, right? So she had a lot of help.
Yeah.
But I remember visiting her there, and she was like, "No, I don't. I want to live here as long as I can." And the reverse mortgage allowed her to live there about 28 more months. But she went out on her terms. She passed away in the home, and I always laughed because I'd go visit her at lunch, and she would be eating Cheetos, the Cheeto puff, the balls, And I'm thinking, all right, if you're 94, you ought to be able to have
I'm
Cheetos at
eating what I
lunch,
want.
right? Exactly. Yes.
Completely. So back to my grandmother, the stubborn one. We had to take her to see her doctor because she never would go by herself. And so we would take her and they do a full exam on her, completely clothed. God forbid, like a person see that.
Right.
And she smoked and drank almost to the very end. And they would be like, Muriel, you need to stop. And she goes, I'm in my 90s. Like, what else do I have to live for
Yeah.
except my cigarette and my
Right.
martini at the end of the day? It's like, whatever's working, let it work.
It's been working for her.
Exactly.
Yeah.
Yeah.
She's alive because of gin. Let the
I-
woman survive.
If you make it to 90 and you've been drinking gin your
secret.
whole life,
Exactly. She
Don't
started,
stop.
Yeah,
Yeah.
exactly.
Right?
Smoking since 12. I think she's doing.
Don't interrupt the.
Just exactly.
don't mess with a
The
good
system.
thing. That's right.
Completely. Well, speaking of getting a little on the older side, I'm sorry. I hope we aren't getting too gruesome here. Another myth. So reverse mortgages can affect Social Security and Medicare benefits.
Yeah, that's a common misconception. So reverse mortgage benefits have nothing to do with Medicare at all, Social Security or Medicare. So people think, yeah, I'm going to lose my Medicare. You won't mess it up at all. And even if let's say you set it up and you have a bunch of equity and you're 80 years old, and we say, Muriel, we can pay you $1,000 a month every month for the rest of your life. So we're going to slowly give her a little bit, $1,000 a month at a clip. So we can send him a monthly income. That number one, that monthly income is non-taxable. It's non-taxable because it's part of a loan. It has to be paid back when mom exits the property. So Muriel could get $1,000 a month for 15 years until she's 95 or whatever, right? It doesn't matter. You never have to pay taxes on it, and it will not affect your Social Security income or Medicare because they don't care. You're not getting a W-2. It's not additional income. It's just you're just paying yourself some of the equity out of your home. The reality of it is we live in a home that has a bunch of equity. It's a savings account. It's a piggy bank shaped like a house. The big idea behind a reverse is like, hey, Muriel, you want access to some of that? Great, we'll let you have it $1,000 at a time or something, right? I mean, there's different ways you can get the money, but the funds that you receive, whether you take a draw on it, a big cash out, or you pay yourself a monthly payment, won't affect any of your Social Security or Medicare. Now, Medicaid's a little bit different, and again, I don't want to go too deep in the weeds here. because it's not my expertise. But you can do a reverse mortgage on Medicaid as well.
Really?
But Medicaid, you have to be careful because you can't have, if you pay yourself money, you have to, you have to do it for like, oh, I'm going to do this project. And so you have to take it and then spend it quickly, right? You don't want to, you can't take $10,000 and then let it sit in your checking account, sit on it for months and months, because that would mess you up with Medicaid.
That is interesting. And what are the ages for that? Off the top, I don't know that. When do those kick in?
Medicaid is, again, I'm not an expert on that. I think it has a lot to do with the your income and asset qualifications. So, but I've done a reverse mortgage on many occasions for people with Medicaid. You just have to be careful how you receive the money.
Okay, interesting.
Yeah.
Man.
There's a lot to unpack here. I knew there would be.
I agree. You're right.
Finances.
This is all new.
Makes my
Right?
head spin.
I'm wearing Kevin out. There's too many facets to this loan, and then that's the struggle. Like people go, well, send me I just want to learn more. Send me some information. I'm like, oh, like.
Yeah, it almost
Where do
sounds,
I
it almost
start?
sounds too easy,
Yeah, in some ways, right? It does kind of sound too easy.
which makes it a little scary.
Yeah, yeah. You might be right. You might be right.
No, I think it's very
I don't know.
individualized.
Yeah.
I think what you said, 95% of the time, it falls into the HECM, saying that right? Yes.
Yep.
And so, but I mean, so much of it depends on where you live, how much equity, what are you going to qualify for, and does it really make sense for your lifestyle? Where are you going to be in 1 year from now? Are you looking to sell? I think that would be a big question. If they're 65 and they're like, you know what, like my parents have said many times, we'll see if that changes. They're both in their late 70s. I just do that in case they're watching, because I always called them. I say that to my dad. He's my old man. It's like, I'm not late 70s. I'm like, you sure are.
Yeah, you are.
They always say that they want to be in the social environment. And so if they're thinking of someone selling their home in a year, it might not be the best option.
Well, yeah, I'm glad you mentioned that. I mean, I've been telling you about how great a reverse mortgage is, right? Kevin's like, okay, all right, I got it. Yeah, it's awesome.
What's the catch?
What's the catch? I mean, the biggest reason to me to not do a reverse mortgage, a HECM reverse mortgage, would be if you're going to move in a year or less.
Right.
Because the upfront cost of a reverse mortgage is more than a traditional mortgage. Okay. So let's unpack that just a minute here, because everybody's like, well, I knew it. I knew there was a catch. These things are more expensive. It's like, they are more expensive because the FHA insurance component, right? So the insurance that allows you to live there and and would allow you to be upside down, right? If, in extreme examples, well, that insurance is not free, and it goes right to the government. It goes right to Washington, D.C. It goes into the FHA insurance fund. And that's part of the cost of doing business on a HECM reverse mortgage. So I would tell people, generally speaking, if you're going to be in the home for a year or two, less than 2 years for sure, a year and a half, I would probably not recommend doing a reverse mortgage, because I wouldn't say it's not a short-term loan. This is not a bridge loan. I don't want to do a loan for your folks to go, hey, let's do a reverse now, and then when they move and when they sell a year from now, and they move to Arizona, we'll look at something else. It's like, just wait and let's do it on the house in Arizona, right? Because you don't want to pay all that upfront cost. Now, to pay the upfront cost and for mom and dad to go, we're not moving and we want to live here for the rest of our life, or we plan to live here for 5 years, 10 years, hopefully 20 years. There's not a better product out there, truly, than a reverse mortgage because of what it can do.
Right.
And I think, it will pay for itself 10 times over if you're in that home for 10 or 15 years, because of the savings, not having to make a monthly mortgage payment, the freedom to be able to draw money from it if and when needed. It makes sense all day long. But I don't like it it's definitely not a short-term loan. It's not like, hey, we're moving in here. I'd be like, this is not the vehicle for you.
Okay. I'm glad you said that. I was curious when the break-even point would be, just with cost and how much you're going to save. So it's like if you're 62 and you have the long jeans, like the Duke jeans to Normandy jeans really are, then like, hey, if I'm going to be here for 10 more years, it makes sense.
Yeah.
That's kind of where, like, that sweet spot of break-even is the 10 to 15 years.
Well, I would say not even that, actually.
Okay.
Typically, I mean, every situation is different. It depends on if we're paying off a mortgage, right? Sometimes we're paying off an $1,800 a month mortgage. Well, you might get a return on that, in the monthly savings. You're saving them almost $2,000 a month. Well, you're going to be in the plus. You're going to pay back this thing in a year or less, right? So it can be very. But I would say on average, if you just want to get, if you're going to push me in a corner here, Sarah, and you're going to make me say something.
I'm not.
All right.
You can retract at any moment.
No. I would say, generally speaking, if you're planning on being there for 2 years or longer,
Okay.
a reverse mortgage probably makes sense.
Okay.
And it probably, and it's not that hard to figure it out. Again, everybody's situation is different.
Right.
Right.
And to approach another myth, it's not reverse mortgages aren't necessarily for people in financial distress.
Well, I would say it's funny you said the way you phrased that, Kevin. I mean, a lot of people think that a reverse mortgage is only for people. It's only a loan of last resort, right? That's how I would say it. And I would say I always push back on that. Like, no, it's not a loan of last resort. Now, you got two scenarios here, right? You've got the loan where you've got a couple that pay $2,000 a month and they make $4,000, $3,500 a month in Social Security. So half of their income is getting eaten up on their mortgage, right? So for them, it's a bigger deal. Like it's immediate. Like this is a game changer. This is a life-saving loan. It's going to let us stay in this home. And that's true. But plenty of people on the other side of the spectrum go, well, I don't need it. I owe very little on my home. I make good income. To me, unless if you've got $5 million in the bank and you're making $10,000 a month in monthly income, congratulations. You probably don't need a reverse. But I just did a reverse mortgage for a realtor, him and his wife. They own their home free and clear. It's $800,000. We were doing it to take out the reverse mortgage line of credit. He's going to put that money in his reverse mortgage line of credit because he's planning on living in this home for the next 10 years or more. And it becomes a safety net for him, right? And it becomes an additional, what I like to call a buffer asset that he can draw on if and when needed. He doesn't need the money today. He makes good, he's got good income. He's got $800,000 home that he owns, but it becomes a nice safety valve for him if and when they need it for long-term care or medical event.
Just in case. Yeah.
Just in case, right? Now, I would not do that loan if you're moving in a couple years. But it's not a loan of last resort, right? It's, when properly understood, is really a financial planning tool that's going to help either somebody just age in place and have lots of financial options, or literally keep somebody in their home. This couple that I just talked, can I tell a quick story?
Sure. Of course.
I think this is the best way to kind of put it into perspective. So this couple that was paying $1,800 a month, they made about $3,500. So, more than half their take-home pay, their Social Security was getting eaten up. They were struggling. It was tough. And, that coupled with a couple credit cards and stuff, and they have no, right? It's, they're grinding it out every month. It's not fun. This home had been in her family for over 60 years. It was in North Denver. And it was like kind of one of those things where I don't know how much longer we can stay here. So the fact that we were able to get that loan done in February of this year was huge. I mean, she was literally crying at the closing, right? Like, you're able to keep this home in our family. 2 months later, Kevin, I got a call from her husband. She had a stroke. And it's heartbreaking. And I don't say that I don't take this lightly, but it was heartbreaking. But it's like, thank God we did that reverse when we did. Now she's recovered and she's back home now. But thank God we did a reverse so that, because if one of us is going to pass away, right? I'm married. I mean, if I pass away first, and it's still tougher on the surviving spouse. So having the reverse in place always makes it easier for the surviving spouse. That's one of the least understood things, and one of the great features of a reverse mortgage. I mean, it's kind of morbid to talk about that, but that's reality, right?
Absolutely.
I think that's a really good point. I'm glad that you told that story. I mean, because you never know who's going to pass, and it is the reality. As you leave, it's a burden on the survivors, and it is really sad to say it like that, but it is the truth. It's it is. Now what? And it's nice to have it be a little bit easier, and yeah.
Yeah,
even like you said, someone having a stroke who needs care.
Exactly.
or
I was thinking
somebody
for
falls ill,
medical bills.
issues, yeah.
Exactly.
Right, right. And to have like that reverse mortgage line of credit, in that case, and you have a health event, to be able to pull money out of that and not be stressed out about it, right? One little feature, and again, we can go down a million rabbit holes, and I know we won't, but that reverse mortgage line of credit actually grows, so the amount that I'm not using actually grows by whatever the effective rate of the loan is. So people don't understand this either, because otherwise, a normal line of credit called a HELOC, right, a home equity line of credit, normally people are like, well, why don't you just get a HELOC? Well, the problem is a couple things. Number one, when you're in fixed income, you probably aren't going to income qualify to get a HELOC. Number two, if you borrow $100,000 from your HELOC, you got to start making a $1,000 a month payment immediately. So that kind of negates the money you're pulling out, which is kind of silly. And number three, in the HECM world, the HECM HELOC, the HECM line of credit, actually grows. So if I have $300,000 in my line of credit, it's actually growing by 6% roughly annually. So it keeps giving me a little bit more of my equity that I can borrow down the road if and when I need it. So it's really a cool product.
That's pretty
I
amazing.
think.
No, I agree. I know. Next time that you're in, I want to delve into a little bit more of that. We were focusing, I think, more on the loan part. But the line of credit is, and again, that's 62 and up, correct?
62 and older, yes.
Okay. That's fascinating. I mean, that opens so many doors and so much flexibility for people. But I know educating, I've said that so many times this week, on finances, with real estate, with insurance, mortgages. If we educate ourselves, it's a really more beautiful world, and to not walk in blind.
Yeah, and that is like that times 10 in the reverse world, really, right? I mean, I have to educate, right. The better I am at educating, the better I am at helping people, because there are so many misconceptions and people think all this stuff. So that's a challenge, right? That's my daily challenge is, am I doing a good job of getting the information in people's hands?
For sure. Well, you did a fabulous job.
Absolutely.
I mean, thank you. Yeah.
Yeah, thank you for being here. And another note, your website has a lot of this information on there too. A lot of videos at nomonthlymortgage.com.
Yeah, we've done. I try to
informative.
do a lot of videos because I think that's a good way to hopefully educate people. That's quick.
And easy, like with all these questions like I just asked.
Yeah.
No,
yeah.
it's great. Yeah, it's
very
literally
helpful.
like on your homepage,
I
your
hope it's
landing
helpful.
page. What is a
Straightforward.
reverse mortgage?
Yeah.
Go to nomonthlymortgage.com. Figure it out. There's a wonderful video of you looking a little, confused of what is this? I love it.
Yeah.
And then goes into the myths. So
I have
Education.
some client testimonial videos on there too that I'm kind of proud of, because, like I can sit here till I'm blue in the face and like, hey guys, this is the best kept secret out there. This is an awesome loan. But I like it when my clients will come and do a video with me, because, hear from them, right? Like you're looking at the real person here. It makes a difference.
got
I
a
made my
bunch on
mom do a video with me, and I also made my dad do a video, because I did a reverse mortgage from my dad as well,
Nice.
who lives in Iowa. And so, they're among my many client testimonial videos.
I love it.
Yeah,
Like, son,
it's
you're
fun.
amazing.
Well, yeah,
Okay.
Shucks.
yeah, come on.
I feel you. I feel you. Well, thank you again. And again, for those of you just tuning in, this will be up on our Facebook page for a solid month. If you want to go back, I highly recommend it. And I definitely will, because there's so much education packed into this. So anything that you want to know about reverse mortgages and lines of credit, definitely delve into it. Again, we've been talking with Tim Oddo. You can call him at 303-233-4500. His website is nomonthlymortgage.com, and you can also email him with any questions or to start a conversation at tim.oddo, which is ODDO, at goluminate.com. Well, Tim, thank you so much for coming in.
Hey, thanks a lot, you
was
guys.
excellent.
It's been a pleasure being here, and I hope it was helpful tonight and
Very.
shed a little bit more light on some of the misconceptions. So thank you.
Definitely for me. And
Absolutely.
you're always welcome back.
Okay.
We'll do this again.
Okay.
All right. Thanks, Tim.
Kevin. Appreciate it, man.
All right. We'll get back to our regularly scheduled programming here on K4CO. Have a good evening.